Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, January 11th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Really quickly here, we do have Fed Chair Powell testifying today, 9 a.m. Central Time. So in just over an hour's time here, Fed Chair Powell will be testifying. That could bring about additional volatility to the market. So keep an eye on that as he testifies. Really quickly as well, yesterday's into the day was fairly strong. A very nice reversal off of the lows, a close well beyond the midpoint of the day. By the end of it here, we have ourselves a very nice impulse sell-off with a bounce back, a responsive bounce back already. Now, is this enough of a low to suggest that we are pushing back to new highs? It certainly could be enough of a low to push this thing just beyond 4,800 into, say, 4,810 to 4,815. Is it enough to push it beyond that? Who knows? Now, also, if you're looking here at the bigger picture, we still haven't really hit an edge. This low is still higher than this low, and that low was still higher than this low. The edge down here, 4,500. Into that CLVN would provide more of a stretch and a rejection, very similar to what the NQ did. So this one's still not seeing tremendous amount of pullback, but enough, at least on par with the last several weeks. If you look back here as well, in terms of the overall trend that we've had for the last year, we could stand to pull back again a little bit lower here before we perhaps turn around. But this is not a bad low. Again, there are certain stocks that are at great market structure levels right now, which could turn up very nicely. Others could continue to go down based on market conditions. But overall, this one right here, decent little pullback, at least a short-term pop to the upside could be seen unless price finishes the day below that midpoint. A close or a push and a close through that midpoint would suggest new lows ahead. So that midpoint is the level to watch as a level of bias the rest of the session. Okay, let's take a look here at the NQ. The NQ got more of a sell-off. So you can see here the impulsive move down to begin the year, more significant. It dropped into our 15,000 to 15,200 area of support. That's the level that we talked about during the monthly market outlook last week, wherein we mentioned any pullback as deep as 15K could offer a 2,000 point rally up ahead towards 17K. We got very close to that 15K, got to 15,150, and again there could be that move towards 17K up ahead out of this one. Again, a very good move. It did also take out recent lows. It also took out the previous month's low here and is also flushing below the previous midpoint of the quarter. So this pullback's not bad. The one thing here is that it is also in line with the uptrending market that we've been within over the last year. That uptrend right there has been intact. We kind of come down here. We're hitting that low part of the range. And this low, again, better than the ES. This low, very, very strong, could lead us up to 17K. Is this a strong enough low to hold? That midpoint's going to be very important as well. So we're going to watch the previous session's midpoint for signs of failure. That level right there is 15,410. So 15,400, basically the key level to watch here on any pullback. Over the next 1 to 3 days, we could sit up here, kind of bounce around before we ultimately start to make the move higher. Again, with Fed Chair Powell on deck, we could see a little bit of chop back and forth, but ultimately, if this strong low is in, we could be at least looking back to a move back towards 16K, kind of the middle of this range, followed by a move up toward the top of the range, 16.8, and up to 17K. All right, taking a look now at crude oil. Crude oil remains very, very strong overall. A couple of strong lows here, followed by higher market structure along the way. At this moment right now, you have the 8 period rising strong to provide support, and any pullback below that 8 period average could provide the next buying opportunity for a continuation higher. We're looking for a return back to 80.82, which is an FOMC key level from November 3rd, and then we're looking for perhaps a continuation across the range toward 85 to 86. Again, as long as price remains above 76, any pullback as deep as 76 could provide as much as a +8 to a +10 to the upside, as price likely trades within the 76 to 86 range moving forward. All right, taking a look now at Bitcoin here. Bitcoin down just marginally here to begin the day. We are still trading below the previous quarter's low. That's very important. Below the previous quarter's low, but look at this right here. Yesterday's low, 39,470. That's the first time that price has traded below the 40K level since 9/22, and that day didn't even trade below it. It got to 41,145. The day before that was 40,085. You have to go way over here, and that was 39,910, and that was last August. So last August is really the first time that we've gotten this low. And the 40K level, as we mentioned, is the next major market structure level down. And it is a very good level to watch for it, even a short-term bounce. A short-term bounce could take you back towards, say, 52K, the other side of the range here. So that's a very, very good market structure zone. You can see we've traded in that zone before. If there's a failure at 40, that's where you end up dropping back to 30. And 30 could be a zone right here where, you know, we may not see a perfect bounce off of 30 or 29 again. It may need to go a bit below that zone before it turns up. 25K could be that area. That's one of the levels we talked about before, that if we have kind of a long-term expanding range, then we probably need to see this lower edge taken out. So 40K is going to be that level that opens up that downside move, but as long as we stay above it here in the near term, we could trade as high as 52 and kind of trade in this zone for a little while before we see that continuation. So right now we've seen a little bit of a bounce back off of prices below 40. It wasn't the most significant reaction, but it did push higher. Right now we're seeing a failed new high in a downtrend. That can tend to be a bit bearish here. So we're still in a downtrending market for this one. We're still below the previous quarter's low. We are holding the 40K, but more downside could still be seen ahead. Ethereum, here's Ether futures. This one's the first time it dropped below 3K in a very long time. Over the weekend, the cash got exactly to 3K and bounced. And then here yesterday, we dropped below 3,000, hitting 29.18s. 29.18s, that's the previous quarter's low here. This is the first time we had seen these levels since basically the end of September. And we also completed a retest of the September FOMC key level. So that FOMC key level right there, 30.12, it went bid. Lower high over here, and it comes all the way back to that level. Again, showing the worth of these FOMC key levels. Now, one of the ones that we've just developed is the December FOMC. And you can see right there, it's about 3,800. Whenever price is done going down here, we're likely going to snap back to that level very quickly. That could be a very good medium-term target. But where do we find this low? At the moment, 3K is just kind of a round number, but it is also at the quarterly low. The 2750 level is more of a market structure edge. So still looking for maybe a push lower into that zone. But if this is all we get, and that's the last time we get below the previous quarter's low, then we could be looking at a bounce quicker than not back toward 3750. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.